gold trading. How many of you buy gold? How many of you buy gold? How many of you people give you gold instead? Okay, a lot of people. Okay, same for me. Why do people buy gold? Normally it's the older generation who buy gold because of various different reasons. Now you can understand that gold is very different from other commodities. Very different. How is it different? How is gold different from other commodities?
No income.
No income?
No yield.
No yield? So gold, just now I mentioned already, what is it? What is it? Safe haven currency. Now, it's different in a way that it also has aesthetic value aside from being a commodity that can be used to build machines. Okay? It also has aesthetic value, meaning people can buy it too for decoration purposes. It's not like people buy oil to decorate their home. Okay? So people buy gold sometimes to just put in their home for decoration purposes. So that's one purpose. It's also used for capital preservation during recessions, also to hedge against inflation. So this is why, you got to take note of this. This is why gold will go up during bad times and during times when there's high inflation. Okay? Gold will go up during bad times and also during times when there's high or low inflation? High inflation, because people want to use it to hedge against inflation. Very important. Safe haven and used as a reserve for central banks, and also when people lose confidence in fiat currencies, then they'll buy gold, and also to maintain a balanced portfolio, because the correlation of gold with other asset classes is not that strong. So if you want to diversify a portfolio, you want to pick asset classes that doesn't have a strong correlation with stock market, bond market, currencies, and that is gold. Just 2 months ago, come across this news that says young Chinese spurn traditional investments in favor of gold. Normally you think that people who buy gold are the older generation, agree with me? But nowadays in China, young people are buying gold instead. Young people are buying gold instead. Why? Why? Because China is an emerging market, so it's vulnerable to high inflation, and also because a lot of young people nowadays, especially in China, they feel like housing prices are so expensive. What is the point of saving for a house? Might as well buy gold. And they don't just buy gold bars, they buy this. What is this? Looks nice, right? Can be used for decoration. What is this? Gold beans. Cannot eat one. Gold beans. And just keep it, or maybe use for decoration. Looks quite nice too. Don't know whether they sell in Singapore. Okay. Some of the factors affecting gold prices. I didn't put it here. One of the main factors. Seasonality. Meaning the time of the year. Time of the year. Time of the year. Now, who are the biggest consumers of gold in this whole entire world? Who? China, then? India, very good. Now, in India, the period around October to December is where the weddings are happening. So during that time, a lot of people will buy gold because The Indian bride, she has to be draped in gold. It's a tradition. Okay, so that's why during the period between October and December, gold prices are more likely to go up during that time. Okay, this is called seasonality. There are some gurus who say before Valentine's Day, gold will also go up. Yesterday I see a chart. Okay, goes down before Valentine's Day. So I might not entirely agree with that. Maybe sometimes it might happen. Okay, but other factors, business cycle, risk sentiment, inflation levels, USD. You gotta understand that. What's the relationship between USD and gold? Intermarket analysis. If you know intermarket analysis, USD is inversely proportional to gold most of the time. Not all the time, but most of the time. Central bank purchases and supply and demand. Now for commodities in general, okay, you can understand that commodities are mainly driven by supply and demand. And it's affected by supply and demand differently, very differently, because for supply, what affects the supply of commodities? The presence of mines. Agree with me? And it is very vulnerable to supply shocks. Meaning when there are war, like a few years ago, Ukraine war destroyed a lot of refineries, factories, and hence decreased the supply of commodities, which cause an inflation. So all these, the discovery of mines, war, destruction, is going to cause a sudden supply shock. A sudden supply shock. Whereas for demand, it is more steady. Because what affects demand is population demographics, which is going to increase gradually. So let's say for China, in China, people in the village are gradually moving to city life over the next few years. So the demand for commodities are going to increase gradually. Okay? And it is more stable rather than a sudden spike, which is caused by war and discovery of mines. Okay? So demand is more stable, supply is more volatile. So what is the relationship between gold and commodities index? Now this one is the correlation coefficient indicator. When the blue shade is on top, means that it is positively correlated. When it is below, means it is negatively correlated. And you can see that the correlation between gold and commodities index is not strong because, like I said just now, gold is very different as compared to other commodities. It is driven by its specific unique set of factors because it is a safe haven, whereas commodities like oil, iron ore, they are more of a risk market. Okay? Relationship between gold and stock market. Inversely correlated to each other. But you can understand that during a recession, stock market is going to drop more than gold. You realize that gold will drop a bit, but not as much as the stock market. at the start of the recession, at the onset. Okay? Okay, this one. This relationship between interest rates and gold. Do you see which one is the interest rate? This pink line is the interest rate. Purple line is the gold markets. You gotta understand that relationship between interest rate and gold, it is lagging. Meaning every time the interest rate makes a top, every time interest rate makes a top, gold will then start to climb up. Because investors expect that a recession is going to come soon. So they are going to buy gold to protect themselves. Because interest rates are already so high, the next thing that's very likely to happen is a recession, which happened in the past before. When the central bank increased interest rate by too much when it's too high, next thing that comes is a recession. Okay? When the interest rates make a top, gold will start to climb up. So please take note all the time. When interest rate is at an all-time high, it is safer to buy gold because more or less gold will gradually start to climb up. Okay? Can? I think my time is up, right? Marcus, I think my time is up. Okay, so this is the overall strategy. You can look at the big picture over here to generate an idea, a trade idea. You can look at the big picture to generate a trade idea, not to enter a trade immediately, okay? But to generate a trade idea. So this idea is going to be like, okay, so the stock market is like this, maybe I could buy Aussie yen. This is your idea. So in order to know when should I buy, I need to wait for the charts to give me confirmation. You see the difference? All this big picture stuff gives you an idea. Okay, election is coming, idea. When should I enter? Wait for the charts to give me signal. Okay? We cannot be like, oh, elections, let me enter straight away without looking at the chart. Okay, combine both. The best traders that I know, they can combine both fundamental technical analysis. Of course, I've seen traders it's possible to just rely on technicals to make money. There are some traders who just rely on fundamentals to make money. The most important thing, you gotta have good risk management, strong trading psychology, good broker. I can tell you last time when I was blowing my accounts, okay? The same trading strategy. In my first 2 years, same trading strategy. Keep blowing accounts my first year. I'm thinking, how come I'm finding all these strategies from different gurus, but I still cannot make money? Then I decided to focus down on just this strategy that I have. But then I changed one thing, I fixed my risk management, trading psychology, then I become profitable. Same strategy. Before that, bad risk management, bad trading psychology, keep losing money. Same strategy, improve on my risk management, trading psychology, become profitable. I've seen so many traders like this. They just improve on their risk management, they can make their imperfect trading strategy profitable. So sometimes you gotta stop going around Singapore or overseas. Stop going around finding the perfect trading strategy. Okay? Because you know Paul Hugh Jones, his win rate is only 40 to 55%. So is it perfect? Is it perfect? Only 40 to 55%. But why is he so good, so profitable? Of course, he has good components, but his risk to reward is very good. Risk to reward is very good. Okay? Hey, what is this? Okay, if you want more lessons, you can go to a specific playlist. I'll let you know what playlist is that, okay? Now the thing is, you don't want to go around finding different perfect trading strategies only to realize those lessons are inside for free. You don't want to be like spending $5,000 on somebody else's trading courses only to realize that I teach the same thing for free. So make the most out of free content. Make the most, whether you buy my stuff or not, I don't really care too much about it, because 3 years ago I already stopped all the preview selling courses on it. Whether people buy my full courses, up to them, up to you. If you can make the most out of free content, make the most out of it, just like all these people. I share all your videos with friends and now we all making profits. Okay? Make the most out of it. Doesn't mean that if it's free, then it's no good, then it's like, you know, make the most out of it. Because I spend a lot of money to learn what I know now, and also spend a lot of time to do all these videos. So this specific playlist is called Free Trading and Investing Courses. Now, if you want to know the fundamentals, just now I talked about what is a safe haven, what's a commodity currency, what is a risk market, non-risk market. What currency is a oil exporting country? It's this video. This video. Okay, but if you want to learn all the price action, confirmation, all that, support resistance, you're not clear, this playlist. Make the most out of it. Can? Cannot? Cannot? Actually, you can scan here, it's easier. Never mind, you can just Google. So this is my contact, but be careful of impersonators, okay? I won't go around messaging people. I'm not on WhatsApp. I don't provide signals on Telegram, because if you go to Telegram, careful, signal, VIP signal, VIP signal, then it's like, those are not me, okay? I won't go around DMing people, because that's what impersonators do, that's what they do all the time. Okay, so if you want to contact me, it's through this email, then this is my website, then this is Instagram. Okay, so with that, I will stay back later on to answer some of your questions. With that, I hope that this session has been useful for you. And Marcus is going to come back to share more about brokerages. And with that, thank you so much.